All right, it's September already. Can you believe it? It's like the year's just flying by here. Today, what we're going to talk about is September in general. The financial media makes a lot of effort to kind of talk about this month because it's typically not a very strong month. It's usually a weak month. So what we're going to do today is we're going to work with you guys that are the more stock pickers, anybody that's not the traditional sort of index fund investor, and we're going to talk about the different sectors of the market and what you might expect. Okay, so for the month of September, we're talking about how weak the markets can be. Now, there's a lot going on this September, so there's a good possibility that we may see some more weakness, and it continues with over, history. So what I'm going to do is I'm going to go back 20 years, and I'm going to analyze the markets for you, the individual sectors, and we're going to talk about some of the weakest sectors so that if you're participating in the markets as a stock picker or if you play individual sectors, you'll know what to expect. First things first, let's start at the top. Let's look at the S&P 500. Now, all investors that participate in the market, they usually look at the S&P 500. If you're an index fund investor or just kind of a part-timer that doesn't really pay close attention, then you probably got sucked into the Dow and what the Dow does. Now, we don't usually look at the Dow because it's only 30 stocks. Now, granted, those are 30 really large, stable companies, but it really doesn't give you a big picture view of what the market's doing. The S&P 500 obviously covers 500 stocks, so we're going to take a look at that and see how has the S&P 500 performed over the last 20 years. All right, so on average over the last 20 years, the S&P 500 has lost about 1/3%. Not really a big deal, right? So if you had some long-term investments or you're a stock picker and you're out there trying to pick individual investments for your account, then 1/3% decline is not really that big of a deal. Now, if you're investing for each day, right, and you just like to buy and sell within a couple of days, that could be a big deal because that doesn't mean we're only going to go down 1/3%. That's the average. So throughout the month, maybe we fall 2%, then rally 1%, and you get the picture. So for long-term investors, really not a big deal. 1/3% on average is what you can see going back in over 20 years. Maybe not a reason to be concerned. What I really want to talk about are tech stocks. Now, if you've been following along in tech land, especially in those FANG names, Facebook, Apple, Netflix, Google, and then they include Amazon in there as well, you've noticed that those stocks have been on fire. They have just been higher, day in, day out. In fact, if they've even had one bad day, many times they just zip right back up to new highs. Everybody seems excited and attracted to the tech stocks at the moment. Now, because of that, maybe September is going to be one of those outlier years. I have no way of knowing, but they're really on fire now. So if one thing scares the tech investors, they may be willing to pull that money out and put it somewhere else. If we go back over 20 years, the tech stocks as a whole, as a sector, tend to lose an average of 1.66%, almost 1.67%, over a 20-year history. So that's bigger. That'll catch your attention. You notice a 1.66% decline somewhere or more, that's going to get your attention. So long-term investors, if you're stock picking and you've got some tech stocks, it might be good reason to try to protect a little bit of that. I don't know how you want to do that, whether you hedge, whether you take some of the profits off the table, or you rent out those stocks like we talk about on our website, but you probably want to keep a closer eye if you're looking to exit those positions soon. And lastly, the one sector that sticks out as having the worst performance in the month of September are your materials. Now, these are gold, oil, steel, copper, aluminum, things like that, the materials sector. If we go back 20 years, the average performance is the worst out of all those sectors. For the month of September, the materials sector loses an average of 2.72% if we look over a 20-year time period. Now, that's an average. There's obviously been much worse months, and there's been some good months in there if the average is minus 2.72. Now, here's the deal. The materials sector has been moving like this, right? It's been more of an active market, whereas the tech stocks have been pretty much just straight up, meaning everybody's excited, buying more, buying more, buying more, buying more. Whereas in the material stocks, we've had people riding a wave, taking some profits, thinking they found the top, buying some more, taking some profits. It's been more of an active sector. Okay, what does that mean? Well, it means that there's more activity there. So we're not going to have tons of people trapped at high prices. Like in the tech stocks, everybody's paying a top price to get in. So if one person gets scared and it starts a snowball effect, you could see a greater decline in the tech stocks. Whereas material stocks, even though they don't perform very well in the month of September, they've already been moving around. We have almost an equal amount of people believing it's going to drop as we do that people think it's going to continue higher. Okay, so here's the deal. If you are a long-term investor, these are not numbers that are probably going to scare you. If you look at your portfolio, you're probably looking at decent returns over the last few years, and you say, all right, so what? If September's a bad month, as long as it doesn't cause any more problems, then I can probably weather the storm. If you're a short-term trader, now you just have an idea of what to look for. If you need help with your retirement investments, even better, that's this guy right here. I can help you. I study these things. I am a market geek, and I'd love to explain to you how I can help. One of the ways we help is by renting the investments in your portfolio. Not us being the renter, but letting other people rent them from you. So if you own a bunch of stocks, index funds, whatever, we can let people pay you to borrow those stocks from you. Now, this isn't some kind of scammy thing. You've heard me talk about this before. Warren Buffett and some of the biggest investors on the planet, that's what they do. They just do it on a really large scale. If you want more information on that, visit our website, check out some of the videos that talk in great detail about what that means, and I hope to talk to you soon.